My lovely friends, I'm happy to be here with you, seriously, on this beautiful Wednesday, February 23rd, 2022. Why am I in such a good mood? I have no idea, but I am tired. It's freaking 5:18 a.m. Pacific Standard Time. All right, look, let's talk, you and me. So, right now, as I am doing this lovely video blog, stock futures are higher pretty much across the board. Nothing major, but higher nonetheless. But what's the bigger picture here? The 10-year yield is coming up a little bit. It's normalizing. The dollar is slightly weaker. It's not a bad setup for this market right now. Crude oil under a little bit of pressure, but still, like WTI is like 91. It's out of control here. Bitcoin is over 39,000 again. Gold and silver under a little bit of pressure. That's the setup for the market right now. What do we know is going on here? We're going to hear from the Federal Reserve, well, next month on monetary policy. In my opinion, and I've been telling you this for a long time, the Federal Reserve is going to raise rates next month. Okay. And that is going to push the stock market higher. I know you don't believe that, but it is. The market wants action from the Federal Reserve. These are going to be meaningless rate hikes, okay? And with regard to the bigger picture is the Fed's balance sheet, okay, which is going to continue to hyper balloon. The market doesn't even really care about rate hikes. It doesn't. In fact, it wants them. Certain sectors of the market are going to benefit from that, banks being one, okay? Now, the real story is the balance sheet. How much debt the Fed has on its books. It's not going to stop. It's going to continue to balloon, and the market's going to love it. Okay, there was no taper. You all know that. Prove it to yourself. Go to the Fed's website. Look at their balance sheet. Look at November. There was no taper. They tapered nothing. Okay. And you can expect rate hikes to come, but they're going to be insignificant. Look, you know the story. The Fed honestly has no intention whatsoever to stop inflating and to stop inflation. Inflation, yeah. In fact, they want to make it worse. And it is going to get worse, much, much worse, especially in this environment of surging energy prices. You all know that. It appears to me that all the pieces are in place right now for a global energy crisis. The Fed will have an excuse to point at energy that's causing inflation. And, nothing could be further from the truth. It's them. But that's the game they play, and that's just the way it goes here. Anyway, so that's really the story. So let's talk about this Russia-Ukraine thing. It looks to me like the market might shrug this off. The market shrugs everything off, in case you don't realize that. Yeah, sure, we've had a volatile couple of months here, but we've had an incredible bunch of years up, record high. And as I said yesterday, all these people right now, they're in some kind of state of fear and panic, and that's a bad spot to be in. It's a really bad spot to be in. You don't want to be afraid because you're going to make bad choices, and I hate that. I want all of you to make good choices. I want you to look at the situation as I outlined it for you. Then do your own research. Look, I lay these things out for you the way I believe they're going. And for the most part, I've been right. Okay. But does it make sense to you? Like I always say, if what I'm saying is not making sense to you, then do a little research. And if it still doesn't make sense to you, that's okay. We don't have to agree on everything. Excuse me. But in the bigger picture, what you should be taking away from this is world central banks are going to continue to inflate. And I also believe not only that, the current environment is going to give central banks the green light to fuel the debt monster like we've never seen before, even more so. I think more debt and more easy money is coming greater than ever before. Because you have to understand, look, the Fed doesn't care about the economy. The Fed doesn't care about you. All the Fed cares about is keeping the stock market propped up and fueling this wealth transfer effect. Again, since the last meltdown, 2008, what has really happened? The middle class has been robbed blind by suppressed rates, okay? And that has pushed cash into the stock market and made a lot of people pretty rich, okay, at the expense of the entire middle class who's under attack. And they're going away. They're becoming extinct. I think you know that. And that's all the Fed cares about, is inflating the stock market. Find reasons to continue to borrow cash into existence. That's it. That is their goal. That is what they're going to do. So just get used to that. All right, look, anyway, so that's the story this morning. Not too much going on here. We got stock futures higher across the board. Bitcoin back over 39,000. Gold and silver under some pressure here. The relative strength of the dollar is lower. WTI still over 91, and I still believe it's going much, much higher, much, much higher. So let's just keep our eyes on these things. We know what to look at. We know what we're doing. We know why we're doing it. And that gives us an incredible edge. You know that. All right, people, look, that's it. I will see all of you at the end of the day, and it's going to be just as lovely as now.